Welcome to Enterslice. Today we are going to talk about Introduction to Composition Scheme. Section 10 of Central Good and Service Tax Act, 2017 introduced the concept of composition scheme. This facility can be availed by any supplier of goods as well as services. One major point to be understood about this scheme is that it is an option provided to registered taxpayers already registered under the Act, i.e. such registration is not a mandatory legal requirement, it is only a right option given to taxpayer which they can avail if their aggregate turnover is less than 75 lakh rupees. GST was introduced with an objective to eliminate complexities of indirect taxation regime, and it requires regular filings and proper maintenance of records in a strict manner. However, the same can become a burden and additional task for small-scale businessmen. To facilitate such small-scale traders and businessmen and to reduce complication of procedural compliances, composition scheme is introduced. Taxpayers registered under this scheme will be taxed at nominal rates of 0.5% or 2.5%. For any taxpayer to opt for registration under this scheme, they must satisfy both of these eligibility criteria. Must be registered under the Act. Aggregate turnover must be less than 75 lakh rupees. In its meeting held on 18th of June, 2017, the GST Council has recommended that the turnover limit for composition levy for CGST and SGST purposes shall be 50 paise lakh in respect of the following special category states, namely 1. Arunachal Pradesh, 2. Assam, 3. Manipur, 4. Meghalaya, 5. Mizoram, 6. Nagaland, 7. Sikkim, 8. Tripura, and 9. Himachal Pradesh. The Council has also recommended that in case of Uttarakhand, the turnover limit for composition levy for CGST and SGST purposes will be 75 paise lakh. 4. For the state of Jammu and Kashmir, the turnover limit for the composition levy will be decided in due course. Other than the taxpayers not covered under the above-mentioned criteria, subsection 2 of Section 10 of the Act specifies a list of registered taxpayers not eligible to opt for it. They are suppliers of non-taxable goods, 1. Engaged in making any interstate outward supplies of goods, supplier of services other than restaurants, except which serve liquor, supplier of goods through e-commerce operator who collects tax at source under Section 51. Manufactures such goods as notified by government on the recommendations of the Council. Other than these specified categories, another type of taxpayer who cannot opt for composition scheme are occasional traders, i.e. ones who are not involved in regular business cannot avail this scheme's benefits. Such occasional traders are casual taxable person and non-resident taxable person. Tax rates applicable for suppliers registered under composition scheme enjoy the benefit for lower taxable rates as compared to others. These applicable rates are 1% of turnover in case of a manufacturer, 2.5% of turnover in case of restaurants other than which serve liquor, and 0.5% of turnover in case of other suppliers. Reduced tax liability. One of the major benefits under the scheme is the reduced tax rates, as the suppliers are only required to pay somewhere between 0.5 to 2.5% aggregate turnover. In general cases without registration, taxpayers might have to pay as high as 28% depending upon their business. Reduced compliances along with reduced tax rates. Another major benefit is reduced compliances. In general course of business, a normal taxable person is required to file a minimum of 3 tax returns monthly including statement of outward and inward supplies. However, after registration, he will have to file only quarterly returns. Increases liquidity. As the scheme provides the lower tax rate benefits, it results in more funds left in the hands of the taxpayer which he can utilize into furtherance of his business. No input tax credit. It does not provide for input tax credit, i.e. taxes paid by the supplier on purchases cannot be claimed as ITC. It results in escalated cost of business. No tax invoices. Though the tax rates are reduced, scheme holders will have to keep the burden of taxes to themselves. In general, course of business, supplier charges these taxes from their buyers, but under GST Composition Scheme they cannot charge the same from customers, hence the cost of sales will increase. High penalty. If any discrepancies are found in the application of any subscriber after the registration has been granted to them, or if the subscriber is no longer eligible and fails to inform about the same, then such taxpayer will be liable to pay a penalty which can be equal to tax payable, along with the differential tax. Only intrastate trading. This scheme can only be availed by traders operating in a single state. No taxpayer with interstate trading is qualified to apply under this scheme, which results in limited exposure of markets and inability to do import exports. Taxpayers registered under a single PAN cannot apply for composition scheme on individual basis. If any one of them plans to register, then all of them will have to apply under it. For more information, visit www.enterslice.com or write an email to info@enterslice.com. You can also call our experts.